Nasdaq seeks amendment to BlackRock's Bitcoin ETF for in-kind redemptions. The in-kind redemption model is seen as a more efficient option for the spot Bitcoin ETF and should have been allowed from the get-go, says an ETF analyst. Nasdaq has submitted a filing on behalf of asset manager BlackRock, seeking a rule change to permit in-kind creation and redemption for its spot Bitcoin exchange-traded fund, ETF. Bloomberg ETF analyst James Seyffart said in a January 24 X post that BlackRock should have been allowed to do this from the get-go. When the BlackRock iShares Bitcoin Trust, IBIT, launched alongside the other 10 U.S. spot Bitcoin BTC $105,153 ETFs in January 2024. On the same day as the filing, 6 more crypto ETF applications were filed in the U.S. In-kind redemption limited to authorized participants. Nasdaq proposed to allow for in-kind transfers of the trust's Bitcoin, as per a January 24 filing with the U.S. Securities and Exchange Commission, SEC. The filing stated that authorized participants, institutions that facilitate the creation and redemption of fund shares, would be able to use either cash or Bitcoin to create shares or receive cash or Bitcoin when redeeming shares. This model is more efficient for ETFs, as it avoids bid-ask spreads and broker commissions from selling the basket to raise cash for issuing shares. However, cash creation provides more flexibility for fund participants. Pseudonymous crypto analyst Marty Party told their 143,600 X followers on January 24, "This means more transparency and on-chain record of flows. However, individual investors won't have access to the in-kind creation and redemption model and will need to stick with the cash model. Individuals won't be able to do in-kind creations and redemptions," Seyffart added. BitSeeker Consulting Chief Architect Chris J. Terry emphasized in a January 24 X post the confusion many have had, thinking this means individuals can now deposit and redeem Bitcoin. He said that this is not the case, as it primarily benefits authorized participants and helps maintain the liquidity of the ETF. Seyffart said, "What it means is that ETFs should trade even more efficiently than they already do theoretically because things can be streamlined. IBIT continues to see inflows." He said one of the main benefits is that there are less steps and less parties involved. Terry said that in-kind redemptions also play a vital role in the tax efficiency of ETFs. By allowing the exchange of shares for underlying assets, ETFs can minimize capital gains distributions, which can be a benefit for investors holding shares in the fund, Terry said. The IBIT is the largest spot Bitcoin ETF in the U.S. by inflows, having clocked $39.57 billion in inflows since launching in January 2024, as per Farside data. Meanwhile, on the same day as the Nasdaq filing, European investment firm CoinShares filed for both a Litecoin, Lieutenant Colonel, ETF and an XRP ETF. Meanwhile, asset manager Grayscale submitted filings to convert its Solana, Sol, and Litecoin, Lieutenant Colonel, trusts into ETFs and also filed for a Bitcoin Adopters ETF and an Ethereum Premium Income ETF.
Friends, thanks for watching. Please subscribe my channel for more videos.